Good morning, all. Thanks very much for joining us here on our latest episode of Leonid's Live Lounge. Today we have Shannon Bryant. Hi there, Shannon.
Hi, Jamie.
Hey, Shannon runs a boutique trade and customs compliance consulting firm, Trade IQ, and we thought we'd jump on today and, in light of the election results last week, to discuss the potential implications on trade from this. So, Shannon, thank you very much for joining us today.
Thank you so much for having me.
So let's kick things off. What should US importers and exporters be prepared for in 2025? And do you have a sense of what that timing looks like?
Yeah, so I mean, the obvious thing, I guess, is tariffs, right? They should absolutely expect tariffs. From a timing perspective, I would expect tariffs on Chinese origin goods to come hard and fast, right?
Mm.
So the former president has the playbook for this already. He's been through the process. He doesn't have to launch a new Section 301 investigation. All of the framework is there. So I would expect to see some Chinese tariffs right away in the first 100 days. And I think a lot of companies are anticipating that. And so they are front loading inventory, which I strongly recommend to anyone if you've evaluated your Chinese origin goods and seen what things you just cannot resource in the short term, aren't easy to move. Those things, definitely prioritize those for front loading inventory because the cost of doing so is going to be kind of expensive, right? Freight prices are already going up, warehousing costs are going to get more expensive. You're going to have some capacity delays in transit, those kinds of things. So to the degree you can front load that inventory, certainly do that because we know that that's probably going to come hard and fast. Beyond that, from a timing perspective, I also expect the corporate income tax rate reduction to come pretty early as well. What was said in the campaign trail, a proposed reduction from 21% to 15%. And I expect that to come pretty early in the game as well for the 2026 tax filing season. Beyond that, in 2025, I think after that initial additional tariffs on China, I think we should expect to see escalation of that throughout the rest of 2025.
It'll also be interesting to see how China responds to it as well. Which we're only playing one side of the game here as to what Trump will do and when, and it will be determined as well by how they respond, and we don't know where it will go from there.
Absolutely. I would expect retaliatory tariffs to be at the same order of magnitude that, the tariffs are imposed in China, which is historically what they've done. I do think that gets a lot tougher for China to do just because the volume of U.S. goods going into China is a lot lower. So I think any type of retaliatory tariff gets pretty high and just market prohibitive at that point.
It's interesting you say there about the first 100 days. We're now in mid-November. We're talking here a matter of months from now. This could be coming in, so it's not long.
Oh, absolutely. That I would say companies have about 90 to 150 days from right now today to get in whatever they need to get in and whatever they can to in advance of those tariff increases.
Great. And we've heard a lot of different numbers and percentages thrown around regarding tariffs. What do you think a best case versus worst case scenario looks like there? And what's your guess about the most likely outcomes when it comes to new tariffs?
Yeah, so I'm really shaking my magic 8 ball here and trying to tell the future, but
Aren't we all?
my gut says that I don't think that we'll necessarily see the very high blanket tariffs that were thrown around the trail. Like I know we heard numbers as high as 60%. I think that's coming in really hot. So I don't know that we should really expect that. I would think that if there is a blanket tariff on all things China, I would expect that to come in at a lower rate than what was stated on the campaign trail, just because of the economic impact and the immediate impact to consumer retail products and the inflationary impact of that, right? I don't know that you would necessarily, as coming in as president, would necessarily want to do that right away in the first 3 months. So I would think more likely that we would see very high targeted tariffs on targeted industries. For example, we've seen even in the Biden administration where they put 100% tariff on China EVs, right?
Mm.
So I would expect very high targeted tariffs with lower, more blanket tariffs coming in. And then one of the other things that I'll just mention about those percentages, one of the ones we heard a couple times was 60%.
Mm.
Where I think that comes from, and again, I'm speculating a bit here, but one of the things that was mentioned was about the proposing to remove China from the most favored nation status, right?
Mm.
So I think that about if you average it out, those column two rates, which is what Russia is subject to now, um, from losing their
Mm.
MFN status, um, that would kind of jive with that 60% number, right? Now
Mm.
there is a range. It's very commodity specific. So it can be 10%, it can be 110%, depending on the commodity. Um, Now, realistically, in order to do that, um, Trump needs to get congressional approval, right? So you need the
I
House
was
and
going to
Senate.
ask.
Now
Mm.
the Republicans hold both. So I do think that that will be proposed. Whether it gets implemented is really going to depend on Congress and how they're feeling about that. But I would expect a little more pushback there just because of the economic severity of it. So I don't think that that's as easy of a lift. So to the degree that he can leverage those Section 301 tariffs to implement, you know, high tariffs on target industries to
Yeah.
really speed up a transition and a decoupling in that particular industry, I would think that's pretty likely. And again, I think the introduction of MFN removal status might be on the table, but I think there's a little more runway to get that done.
And then I guess the discussion to think about, maybe not right now, but in the future as well, is the repercussions of Europe as well. If this happens, it's, we're talking here U.S. China, but will this also be affecting Europe, and will China then be looking to focus more on the European markets, which will then affect competition with European businesses as well? So it's multifaceted, to say the least.
Yeah, my biggest concern for Europe was the threat of, a 10% tax on all U.S. imports.
That would
Realistically,
not be fun for Europe. No.
well, you were likely to see retaliation there,
Mhm.
right, in the event that that happens. And I think actually that has a much more devastating effect on the European market. Though I will say the continued escalation with US and China definitely has a direct impact with Europe as well. Because eventually, got to kind of pick a side, right? And it does
There is
seem
a bit
like
of that.
Europe has been kind of ramping up their efforts related to China as well. So I think behaviorally we'll continue to see that.
Mm. And I mean, we're talking there a little bit around different geographies and how they will be impacted. But what industries do you think will likely be positively and negatively affected by this election outcome?
Oh, well, I mean, it would be silly to think there are no winners, right? So certainly oil, drilling, mining, those types of energy companies
Mm.
definitely stand to gain a lot from both deregulation and investment. Um, However, I think it's a bad time for automotive. Automotive has definitely been a target and right in the
Mm.
crosshairs of both the incoming administration and the current one, right?
Mhm.
You've already seen the 100% tariff on Chinese EVs. More recently, there's also the proposed banning of VMS and ADS technology vehicles by the Bureau of Industry and Security,
Mm.
which again, that's straight out prohibition as soon as model year 27, right? Like you can't import
Yeah,
any of that
that's not
technology
far.
anyway. So I think automotive and technology are probably the ones that are going to be most severely impacted in the short term.
Interesting. And then looking at the broader economy, what do you think the election results could do to the broader economy? I mean, we've seen stock markets and that responding initially quite positively. What's your thinking on the sort of medium term?
Yeah. So as far as the broader economy, it really is going to depend on how new tariffs get implemented. But I
Mm.
think to the degree that they impact consumer goods pricing and drive
Mhm.
inflationary pressures, right? Um, then I think then you see the natural next effect of increased interest rates in order to stabilize
Mm.
inflationary trends and things like that. So money starts getting much more expensive, and potentially some contraction. I would say that at least in the United States, I mean that I think that's part of the reason why the corporate income tax rate gets reduced at the same time,
Mm.
because that kind of insulates companies, especially large multinational publicly traded companies, from some of those actions, right? But yeah, it does look like things start to get a lot more expensive. Maybe time to get some extra toys for Christmas before things start getting pricey.
It's ironic, considering how important inflation was in this election campaign, that some of these, in theory, could have quite an impact on inflation levels if implemented as as discussed. And we look at it. I mean, from Europe as well. We look at the growth rates in the US at the moment and the economy in the US in envy. Whereas within the US, I know there's that the confidence isn't necessarily there in the market as a whole. So it'd be interesting to see how these tariffs could impact the broader economy and how consumers slash voters respond to it. Yeah, exciting times. And taking a step back and looking more at the multinational companies, what kind of actions could they take, and who are most likely to be financially impacted on multiple fronts, and take to mitigate the potential impact of upcoming changes in the trade policy environment? And how could you try and build resiliency around this?
Yeah. So it's a great question and a big one. So multinational firms uh, run the risk of taking two black eyes with some of these trade actions, right? So
Hmm.
if operations or your parent company in the United States, and say you have a manufacturing facilities in Mexico, an entity in China, maybe one in Europe, right? You get both the immediate impact of the U.S. actions and then the retaliatory one to deal with. Um,
Mm.
and so to the degree that companies can weigh in and participate on in the notices of proposed rulemaking and make sure that the government understands the implications. Have a voice. We have mechanisms for that
Mm.
through the federal rulemaking process and the Administrative Procedures Act. So leverage your trade associations and definitely make sure that you're looking at it holistically. I would say if I were the leader of a multinational firm, I think my long-term strategy would be to the degree possible, to source and produce in region for region, right? You're just going to have a lot less volatility. Now, that doesn't necessarily mean in country, right?
Yep.
But we tend to get along and play a little bit nicer with our neighbors, right?
In
um,
theory. Yeah.
in theory, most of the time, right? Um, so, to the degree possible, if you have that type of infrastructure, shifting some of those supply chains around so that you're minimizing that
Mm.
would be beneficial. I would also say too, it's probably a good time to take a look at your intercompany transfer pricing procedures and strategies, and see if there's an opportunity to shift things around a bit or take a fresh look at that. Because certainly, if the corporate income tax rate reduction gets pushed through, there may be a benefit to keeping, repatriating funds back to the United States, or keeping some of that with the parent company in a different
Mm.
tax environment, right? At the current rate of 21%, we're pretty close to the rest of the world. So something that
Mm.
may not have warranted it when it was decreased the last time around, but a reduction from 21 to 15 definitely puts the United States on the lower end of that spectrum. So again,
Yeah.
this might be a good time to take a fresh look at that.
I mean, I run landed me and my business partner in the UK just put it up to 25%. So it's quite a gap between, if it does go down to 15 and 25, it's significant for any multinational company. You can't uh, ignore that. But interesting.
Well, and realizing that your intercompany transfer pricing, if you're a multinational, and is your customs valuation, right? So that drives not just your income tax, but also your customs tax and duties and your VAT or GST, depending on what region you're going into, right? So there's certainly an opportunity, I think, to arbitrage between those three competing tax regimes. And when you have a large footprint like that, a move of 1% in either direction can actually mean a whole lot
Yeah.
financially.
Yeah. Well, thank you, Shannon. I really appreciate it. It sounds like exciting, scary times ahead, depending on which way on which way it goes. But I appreciate you. I guess not necessarily putting your neck out here, but it's quite fresh off the election, and we need to see what happens. But as you say here, I think it's more about just at least preparing for worst case scenario or best case scenario, so you know what to expect. I think that's what we should be taking from here.
Absolutely. Hope is not a strategy.
No, exactly not. But Shannon, yeah, again, thank you very much for your time here, and hopefully, I'm sure the people watching this will take something from it and start a discussion. But again, enjoy your day and thank you for your time.
Thanks so much, Jamie. You have a good one.
Bye bye.